Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I'm going to be sharing with you guys some updated analysis inside of the time frames with Bitcoin. I wanted to cover some of my thoughts when it comes to getting so close to the end of the year. Many people are wondering if we're actually going to be topping at the end of the year. What happens if we actually extend into January? What if we even go further than that? A lot of people are wondering the best strategy for taking profits, how to plan for all of these different scenarios. So for today's video, I wanted to cover you guys my updated trading plan, what I think is the best way to prepare for all of these different scenarios, and how to go about making the most money for ourselves as we get closer towards the end of the year in the safest way possible. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server of over 21,000 members and growing. Links are in the description for you guys to go ahead and sign up for my community. On top of that, if you're new getting into these markets and you want extra educational content, make better decisions with your crypto, links are in the description to go ahead and download my free ebook as well. Thank you so much for tuning in. And with that being said, let's jump right into this amazing video today. So to start off this video, I've been getting a lot of questions from a number of different people wondering how the end of the year timeframes are still going to be stacking up. Do I still think we're going to be following the end of the year timeframes? And really guys, what I think is a potential that we could see if we do deviate from these, because these are all valid theses. We never know truly what the price is going to be doing. And that's the fun part of investing inside of a market cycle, is you're kind of just there at the whim of the market cycle to do whatever with you. So we're going to be talking about some of this stuff. Now, a big reason why so many people are doubting towards the end of the year is mainly just because, you know, we've just barely made an all-time high, and now we're selling back down again. We're getting so close to the end of the year. Bitcoin hasn't even done anything yet. And so a lot of people are starting to doubt that. And so I wanted to give you guys some thoughts and perspectives, basically with what we're seeing here, and then we're going to be diving into the total market cap and covering some thoughts with what we saw in the last cycle, what the time frames were, and what we could actually see play out once again. Now, what I wanted to cover right off the bat is actually analyzing the overall price structure and how the most recent impulses that we've seen, this one right here off of the lows at 29K and back up, as well as this one right here into new all-time highs, how they are actually telling us just how big the next impulse is going to be. So first things first, the way that we are going to do this is by analyzing with the Fibonacci. We need to be able to perfectly know the length of these Elliott waves, because Elliott wave theory follows a relationship of Fibonacci, and this is one of the ways that we can prove whether an Elliott wave is an Elliott wave or not, right? And so the first thing right off the bat, we're going to analyze what the current structure is. So what I've been updating you guys with is how this was our wave one impulse. This was the beginning of our new bull cycle. This was us going up, flipping this resistance here, and then this is us going back up again. And so I've been telling you guys how I think that we're going to be hitting 250,000 by the end of this year. That's been my target. So we're going to go ahead and put the waves up here. And I'm going to be kind of explaining to you guys how the current wave structure is actually showing that there could be a very massive move coming that could very easily meet my 250K target. So this is our wave one. Ignore how extended this wave is because it's not very important. I just needed to get it out of the way for us to actually cover what is going on right here. So we've actually had another impulse. Now, normally inside of another impulse after wave one, it's known as your wave three. It would be like this. This is wave one, this is wave three, and then this is wave five, right? That's generally how Elliott wave theory works. But one of the ways that we can prove whether this is a three wave or not is by analyzing it with the Fibonacci. If this is to be a three wave structure, it has to be at least the same size as this one wave. Generally, it's going to be bigger than the one wave because wave three is where more money comes into the market. So if we analyze that and we draw an extension, the 1618 would basically mean if this wave three hits the 1618, that means it's at least the same size as wave one. If this wave three right here comes all the way up to the 2618, that would basically mean it's double the size of wave one. And that's oftentimes what you're going to see inside of a wave three impulse. It's going to be double the size of wave three. Oftentimes it can even extend way off the charts. I've seen it do that a number of different times. So you never truly know. This was wave 3 for Bitcoin. And if we drew a Fibonacci from the beginning of wave 1 back down, it actually went way higher than all of these Fib targets. And so this is something that happens oftentimes in a market. It's just a way that we can prove whether an Elliott wave is truly an Elliott wave or not, because this wave 3 would have had to go at least the 1618. This means this didn't even hit that. It's way below that. So what that shows is that this can't be a wave 3. And basically what that means is this most recent impulse that we saw from 40,000 all the way up to 69,000, this means it's a subwave of wave 3. So this is wave 1, right? And this is wave 3. This most recent impulse that we saw here is simply a subwave, meaning it's wave 1 of 3. This is one of the things that I've talked to you guys about a lot, stacking one waves. I've explained this a lot inside of my Elliott wave analysis. Whenever you see stacking one waves, it's one of the most bullish setups that you can see, because not only did you finish wave 1, the very beginning of the impulse, but now you're only in wave 1 of 3. Wave 3 of 3 is oftentimes going to be insanely parabolic. You're going to be able to make a lot of easy money, and then after that you still get another 5-wave impulse. We might have a little correction after that, and then we still have another wave 5 of 5 after that, which would be here. We're still working on this wave 3, and that's why I've drawn it all the way up here, is because I still think it's possible we could go up this high. So inside of this impulse, if we know that if this is wave 1 of 3, and we draw our Fibonacci once again, it has to go to at least the 1618. The 1618 is going to be $100,000. So just in the subwaves of wave 3, we can already see that the Fibonacci is telling us that if this is going to be a wave 3 of 3, and it's going to keep following Elliott wave Elliott wave theory, it has to go to at least the 1618. It has to go to at least $100,000 per coin. And that's not even counting the potential that what if this extension goes all the way to the 2618? What if it's double the size of this wave 1? That would be 130K. Let's assume that this subwave goes all the way up to 116K. We pull back a little bit. We still have a wave 5 to go. Let's assume it stops somewhere right around here. That would be 140K roughly just inside of this 3-wave. We'd have a little correction here. Ignore the time frames because I'm not paying attention to them. We'd have a correction, and then we still have wave 5 to go. So it would look something along the lines of this. And then we'd still have another wave 5. That takes us all the way up to 200,000, right? And that would give us a complete 1, 3, and 5 Elliott wave impulse without breaking any Elliott wave rules, without being anything close to unrealistic. This is basically how you would draw those Elliott wave theory rules. And if we combine the Fibonacci, let's measure our 1 wave. So that's going to be the 2618 is going to be $100,000. We're going to draw a target there. And then let's measure our wave 1 of 3. If this goes to at least the 1618, which it has to, if it's going to be following Elliott wave rules, it has to go to the 1618, which is going to be taking it above the 2618. This is already showing us that this wave 3 impulse is going to be more than double the size of this most recent 1 wave that we saw. It's already showing us that we could very easily be seeing this next wave 3 structure topping all the way up here closer to the 3618, which would be $120,000 per Bitcoin. And guys, I need to remind you that that is only wave 3. That's only 3. And then we still have wave 5 still to go. And so I'm here to explain to you guys that even if we're just pulling bare minimum price targets, what the Elliott waves are showing us, it's showing us that this thing is going to be extending really, really, really high. It's going to be having a massive extension. And so nothing has changed long-term bullish-wise. I still firmly believe we're going to be rallying upwards of 100K, 150, and then that's going to be taking us upwards of 200,000. I still firmly believe in those targets. Now the question is, are we going to continue to follow the same 4-year cycle timeframes, or are we going to get a little bit of a deviation from that? And so one of the ways I wanted to explain to you what we could potentially see is by going back and looking at the crypto total market cap in the last cycle. Now, if you guys remember, the total market cap made one more higher high, whereas Bitcoin made a lower high right here. Bitcoin made a lower high, and the altcoins made one more higher high. So the total market cap also made a higher high as well. And so what we ended up seeing here, we actually saw the altcoin market cap top for the altcoins up here at about January the 4th approximately. You could draw it to the 4th, you could draw it to the 7th, but basically the first week of January is where we saw a cycle top for the altcoins. And so really the only other tool that we have to go off of is if we were to remove the drawing tools here, if we were to go to a log scale chart and we were to drop it all the way back and look at Bitcoin, where Bitcoin has topped and bottomed historically, right at the bottom, we're going to be looking at the winters because it's been following the winter cycle tops for a long period of time. We can see down here that this one ends up bottoming at about November 14th. And then once again, we end up topping up here at about November 25th. So winter timeframes is where you're going to get pivot points in both cycle lows as well as cycle highs for Bitcoin. Where did we end up bottoming this cycle? Well, about January 12th. So you can see that there is somewhat of a deviation around the winter timeframes. It's not always going to be right at the end of the year. Sometimes it's a month and a half before. Sometimes it's a month and a half after. And we never truly actually know what way it's going to follow. We just have to kind of stick it out and invest, understanding and knowing that historically it does top at these timeframes. And so if we fast forward all the way upwards towards the top of the last cycle, this one topped at about 11th of December. So we know historically it tops and bottoms at these points. It bottomed in the winter time at December the 10th. It almost topped and bottomed at the exact same time in this most recent cycle, the bear cycle that we just saw. And so this is showing us a number of data points that we can pull, and it's showing us that historically we get these cycle tops and cycle bottoms happening at the winter time frame. That's why I believe that we're going to continue to follow this pattern. But one of the things that I want you guys to remember here is I've always called for the end of the year. The reason I've called for the end of the year is because it's basically like drawing a support level, right? You know that the support level acts as more of a zone. It's an area that we target because we as humans can never know the exact date, the exact price, the exact hour, anything like that. We kind of have to just pick the time frames, level out based off of zones, and then that's going to set us up for the best profit. We know that we've been going up a lot, and we're once again coming towards this end of the year time frame, which if we actually draw a dot, we're right there at the very end. And we know that we only have a short while until we hit that point. You know, we're looking at a little over 40 days left inside of that cycle. And so a lot of people are wondering, you know, what if we don't actually top at the end of this year? What if we go further? What if we go until mid to the end of January? Well, just in the total market cap alone, this topped, you know, the first week of January, so we know that this thing can go into January. It's already has before. We also know that based off of analyzing prior cycles, look at the cycle bottoms. Even though we've never seen a cycle top that happened so early in November as the first cycle bottom did, look over here, November 14th. Well, if we're going to end up being able to bottom early in a cycle, there's no reason why we can't top late in a cycle as well. The timeframes are a metric that we use, somewhat of a zone. We know that if we get out around these monthly timeframes towards the end of the year, every 4 years, we know historically that the market cycle tops. You don't have to be at the exact top, you don't have to be at the exact day, and you're not meant to be at the exact day. It's simply just a rule to follow so that you can make money, so that you can manage your risk. And so in the same way that we can actually bottom early in a cycle, we can top late in a cycle. So if we were bottoming November 14th all the way back here, why can't we top that same rule of thumb later into the cycle, which would be like, you know, February 14th. There's nothing saying we can't do that. And that's the fun thing about these cycles, is we never truly know until you get to the end point. I've said the end of the year, and I don't care if it varies a month and a half, a couple weeks, or whatever the time frames might vary to. I don't care so much because what we have is a number of other indicators aside from the time frames that are showing us that we only have one more high still to go. We've already finished wave 1, we've already finished wave 3, and we literally just made a new all-time high. Even though we're having a sell-off, we're already to the point where we're inside of wave 5. And so wherever wave 5 takes us, is that going to be mid-January? Is that going to be the end of January? Could that potentially be similar to what we saw over here and take us all the way to, you know, February, mid-February? I don't know, and I don't really care, and I don't think you guys should put so much weight on trying to get out at the exact top, because that's not what's important. What's important is being able to get in at relatively low points of the cycle whether it's the exact cycle low or whether it's through this period of time below the all-time highs. It doesn't matter what point you're getting in, as long as you're getting in at some point in the cycle lows and then you're exiting at some point in the cycle highs, you're going to set yourself up, you're going to make a lot of profit, and there's always going to be people that buy earlier than you. There's always going to be people that hold longer than you. There's always going to be people that make way more money than you, and that doesn't matter, because when you compare yourself to what everybody else is doing, you're just going to basically create more confusion in your trading plan. You're not going to know what to follow, and you're going to just fall apart. It's kind of like the saying goes, if you don't stand for something, you'll fall for anything. And with investing, it's exactly like that, and that's more focused, centric towards having a trading plan. If you don't have a trading plan, you're going to fall for every emotion that comes up in the market. Every dip day, you're going to feel that. You're going to be, questioning yourself what to do, when to take profits. Should I sell now? Should I buy, hold more? All of these things go through your head, and having that trading plan is what's going to set you apart. And one of the big things, guys, whether the cycle extends, a couple weeks, whether it extends a month and a half, I literally could care less, because we know that there's so many other indicators showing us that we're going to be topping around this historic point. So when it comes to the very end of the year and this cycle, what I wanted to talk to you guys about as we wrap up this video is kind of summarizing some thoughts on what I think should be the most important tools to look for. Now, we know that the big rule of thumb that we've been looking for is the end of the year cycle top. So right here, we're going to go and draw a line, because this is going to be the time frame that shows where we've been targeting for a cycle top. Roughly around this line, we should expect to see a cycle top, because historically it's what happens every cycle. Now, there's also a number of other forms that we can pull off of. For example, Elliott Waves. We know that we finished wave 1, we know that we finished wave 3, and with us technically making a new all-time high most recently, we know that we're working on wave 5. So if wave 5, let's draw this wave 5 once again at the point of this pivot. Let's go all the way up here to 250, because that's my personal target. This is what I think happens inside of wave 5. We also know that aside from the time frames, we know that we still have one more impulse still to come. So one of the questions is, what happens if we get towards the end of the year and Bitcoin's still sitting at like 80 to 90K? Do I take a bunch of profits then? I don't think it's a bad idea to take some profits by any means, especially you're up in something a lot. But if the price action isn't showing anything close to a blow off top, I also think it's smart to hold. And this is why having experience in the market, understanding what to look for, is really what's going to set you apart. Because what I'm looking for is a few different things. The time frames has been my, goalpost. It's been the light in the dark tunnel for me. I've known that if I stick to the time frames, once we get to the end of those time frames, I'm going to be able to make a true decision on when to actually sell and take profits. And this has kind of been my big thing I've looked for. So now that we're at the first goalpost, or we can see it slightly down the road, being the time frames, we know that we need to be in prepared mode to be selling. We know that. And so this is a preparation. And so with the Elliott Waves also showing us that, hey guys, this is our wave 5. This is going to be the final impulse in this cycle. We know that there's a couple different forms of indicators and analysis that are lining up saying the same thing. This guy's saying, hey, this market's getting ready to top. This indicator is saying the same thing. Hey, this market's getting ready to top. There's 2 points of data that we can pull off of that are showing a cycle top. Now, one of the other bits of data that I like to use is the Fibonacci. And this is analyzing 2 different trends and 2 different bull cycles that have played out in this exact same way. And that's if we analyze wave 3 from the bottom. Oops, let's get this perfect. If we analyze wave 3 from the bottom to the top, back down to the midway point of the sell-off, that's what gives us our end of the year blow off top targets, which historically is topped at this exact same point between the 4236 and the 3618. This is where Bitcoin topped in 2013. If we draw this exact same tool over here, from the bottom of wave 3 to the top of wave 3, back down to the midpoint, we can see that Bitcoin also topped at the 3618 and the 4236 over here. And that was in the last cycle. And so we see 2 different cycles topping at the exact same Fibonacci point. Whereas if we draw that exact moment once again, from beginning to top, back down to the midpoint, that's going to be taking us to a projected cycle top from $248,000 up to $285,000, $290,000 per Bitcoin. So we have a few different tools that we can go off of. What I'm looking for, price so much is, you know, the most, it really doesn't matter that much in my trading plan as much as the time frames do. And so the price really doesn't matter. I'd be happy to sell Bitcoin 150,000, you know, because for it to go from 150 to 250, I'm really not making that much money for what the risk is worth. So this is how I actually am going to be going about selling the end of the year, guys. I'm looking for these Fibonacci targets. I'm looking for these to be roughly met. I think it's going to follow the same Fib targets and the extensions because it has up to this point. We're also looking at the same, you know, rule of thumb based off of the time frames. Could the time frames extend into January? Could it even extend into February? Of course it can. There's no rule of thumb. There's no, you know, analysis that's going to perfectly predict everything. There's always going to be a degree of variance, just as the same can be said for where we cycle bottomed here, where we cycle bottomed here, where we topped here, where we topped here. There's always a variance, but at the end of the day, there are so many conclusions and similarities that we can pull from that as long as you're getting out in that zone, the projected zone, whether it's the time frame zones, whether it's the Fibonacci zones, whatever it is, we're going to set ourselves up in a big way. So as it comes to closer towards the end of the year, what I'm going to be looking for is, once again, you know, us to be going parabolic. I think we're going to keep following the Fibonacci rules, which shows that we're going to be heading upwards of 100K in the next move. That's personally what I believe. We're going to keep watching and see. I'll update you guys as follows. But don't be surprised if we get some quick parabolic moves in here that go up way faster than you think, way higher than you think, and, you know, continue to end and ultimately end up sticking with those same time frames as we get closer towards the end of the year. It seems hard to believe now because we're still, you know, back within the previous all-time highs, but you can get parabolic moves that happen so quick, so sudden, that it'll really catch you off guard, and it'll make you surprised how quick we can actually jump back within the 4-year cycle time frames. So this is my update for you guys. If you found value in this, leave a like, comment, and subscribe. Hit that notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also sign up and join my NFT projects Discord. Links are in the description for that as well. If you guys want to join the Discord server, you know, get access to my video course signals, follow all the trades that I'm taking, see where I'm taking profits at the end of the year, exact prices, all of that fun stuff. If you guys want to get access to that, all of that's going to get taught to you guys, lifetime access for anybody that ends up joining the signals. Links are in the description for the people that would like to join. Thank you all so much for the support, and I look forward to seeing you guys inside of that group. With that being said, I will catch you in the next one. As always, peace out.